The meme stock era changed everything. For a brief moment, retail traders ruled the headlines. Roaring Kitty, GameStop, Reddit forums, they turned Wall Street into a battleground. But as the hype faded, so did the accounts of those chasing it. The truth is, most people lost money. And the ones who didn't, they moved on. Not to another meme, but to something else entirely. Discipline, research, and in many cases, safer long-term strategies like gold. This new generation of traders isn't interested in hype. They're not sitting in comment threads yelling to the moon. They're backtesting setups, reviewing economic indicators, and studying macro cycles. People like Zach Kleinwachs, Kevin Shue, and Vaughn McNair aren't building cult followings, they're building systems. Zach Kleinwachs, a full-time futures trader, uses options to hedge his positions and preaches patience over profit chasing. Kevin Shue, who turned a car down payment into millions, narrowed his focus to one or two high-conviction trades using technical analysis and managing risk like a professional. Vaughn McNair, who started trading at 16, is a risk control machine. He's not chasing big wins, he's protecting capital. All three are known for community-driven guidance, but none of them are selling the dream. They're selling realism. And here's what that realism is starting to look like. There's a shift, a slow turn, and really, a recognition that the market isn't built for hype to win. It's built for cycles. And those cycles are turning. Inflation is sticky, interest rates remain uncertain, geopolitical tensions are rising, and the dollar, while strong on paper, is facing some serious tests from foreign divestment and global economic fractures. China is threatening to dump US treasuries even though it probably won't, because doing so would hurt its own economy. But the fact that this is even on the table should be treated like a wake-up call. Smart investors know what to do with wake-up calls. They diversify, they prepare, and increasingly, they're turning to gold. Not because it's trendy, but because it isn't. You know, gold doesn't need a viral moment to prove its value. It's survived every empire collapse, every currency shift, every recession. It's not a gamble, it's a policy. And more, that policy is becoming part of the new trader's plan. These analytical traders aren't abandoning stock. They're not going full prepper either. What they're doing is rebalancing, moving some of their risk into safer stores of value. Some use gold to hedge against market volatility. Others see it as a vote against fiat instability. Either way, it's gaining traction, not from hype, but from logic. Even Kevin Shue, known for writing high-conviction plays, has openly discussed the importance of balancing fast money with foundational assets. So, the question isn't whether gold is exciting. It's whether the market is giving you enough reasons to stop pretending excitement equals security because, well, it just doesn't. And the traders making it through these market cycles intact? Yeah, they know it. This is the next evolution of retail investing. It's not a return to traditional finance, but honestly, it's a smarter version of it. It's one where you can still trade aggressively, but also know when to step back, preserve capital, and protect your future. If you're watching the markets right now and feeling uncertain, well, you're not alone. Uncertainty is really the new normal, but, uncertainty is exactly what gold is built for. It thrives in crisis, it holds in chaos, and in times like this, that's not just valuable, it's essential. The people who used to chase rocket ships are now quietly moving into hard assets, not because they've given up, but because they've grown up. And if you're trying to do the same, you're in the right place. Like and subscribe so you don't miss our next breakdown. And if you have thoughts on how traders are adapting, or how gold fits into your strategy, drop them in the comments. We are looking to build future videos from the conversations that matter to you.